there, good afternoon. Thanks very much for tuning into Business Day on ET Now. I'm Megha Chadha. Well, let's take a quick look first up at the markets before we, of course, take you through the headlines. So we had a pretty buoyant session, in fact, through most of the day. But once the CAG report was stable, we saw the markets take away all those gains. And we had the benchmarks closing absolutely flat. So 53.66 was where we shut shop for the Nifty. And for the Sensex, we were close to 34 points higher at 17,691, just a shade below that 17,700 mark. But let's take you through the top headlines then of the hour. Now, the first up, of course, the Comptroller and Auditor General has said that a host of private firms made windfall gains from coal block allocations. The CAG report, which was tabled in the Parliament today, pegs the loss to Exchequer at around 1.8 lakh crore rupees. The CAG report also says that Reliance Power made gains of over 29,000 crore rupees due to the concession given to Sakhan Ultra Mega Power Project. Also slabs the government for favouring infra major GMR for the Delhi Airport project. And well, we had Prime Minister's Economic Advisory Council, which cut growth forecast further. Chief Economic Advisor to the Prime Minister, Dr. C. Rangarajan, said that growth could slip to as low as 6.7% for the current fiscal year, close to the Reserve Bank's projection of 6.5%. And drug majors Novartis, Pfizer and Roche vie for Strides Arcolab's injectables business. A clutch of private equity players like KKR and Carlyle are also in the race for a deal that's worth around $1.5 billion, and that's an ET Now exclusive. Now, a day after SEBI throws a lifeline to mutual funds, Finance Minister P. Chidambaram says the measures will help channelize more money into the equity markets. Okay, let's first, of course, start off by talking markets, and what a day it was for the benchmarks at least. We ended the day on a very quiet note, and for the week as well, it was really not much happening for the broader market. So through the day, we traded in a range of close to 60 points for the Nifty. It was about 180 points as far as the Sensex was concerned. In terms of the volumes, though, it was a pretty smart session because we clocked in volumes of over 1.95 lakh crore rupees. The big gainers then for the week that's just gone by, do remember the Nifty and the Sensex have added on just about 0.5% for this past week. However, we did see some big movers for the week gone by on the Nifty at least. So we had a Care India that added on close to 4.8%, a Reliance Industries. Now that sleeping giant really woke up this week and added on close to 4.5%. Not just that, we had an IDFC adding close to 4%, a Hindalco as well that did well for it. That actually slipped a fair bit. Not just that, State Bank of India, of course, that bad run seems to be continuing post its numbers because this one lost about 3.5% for the week gone by. But in terms of the big sectoral movers for the day, well, they were, we weren't lacking any sectoral movers then. So for today, we had the high beta pocket really. It was the realty, the metals, as well as the infra basket that came under the most bit of selling pressures. And as expected, we had the defenses holding out. So the FMCG basket did well for itself, as did the auto basket. But it was the CAG report, of course, after that was tabled, that really took the markets down with it. Not just that, the fact that it created quite a scare for a lot of these names. So whether we pull up a Reliance Power, which has, of course, been, it's been said that they gained close to 29,000 crore rupees under this, under the coal allocations. On the back of that, a Reliance Power touched a 1-month low and ended low by about 6%. That was 57 rupees for this one. A Tata Power wasn't spared either. We had 4% off for this particular name. Not just that, an Adani Power, a Jindal Steel was another one of those big losers, shaving off close to 4% GMR, if I do remember, the CAG report was also on the airport on the airport sector, and also talked about how GMR Infra was favored in land allocation for the Delhi airport. And back of that news, the counter shaved off close to 0.6%. It was off by close to 3%. Adani Power and Adani Enterprises were some of those other big losers for the day. But let's get you more details on then what exactly happened as far as that CAG report was concerned. Now, the country's top auditor, that's of course the Comptroller and Auditor General, has come down rather heavily on the government for favouring a clutch of companies in coal allocation. In its report on coal, power and aviation, which was tabled in the Parliament today, the CAG has pegged the loss to the exchequer on coal allocation alone at a whopping 1.8 lakh crore rupees. Now, the report claims that the procedure followed for allocation of coal blocks to captive consumers lacked transparency. The Coal Ministry says that it does not agree with all aspects of the CAG report and that the allocation was done in a transparent fashion.
किसी माइन की सीम कैसी होगी, इसको केवल इस आधार पर, एवरेज के आधार पर आंकलन करना, इससे हमारी मिनिस्ट्री सहमत नहीं है। जिन 57 कोल ब्लॉक्स को एलोकेट किया गया जिसमें की कैग की आपत्तियां हैं, अगर उनको ही केवल देखें तो उनमें से केवल एक कोल ब्लॉक ऑपरेटिव हुआ है। इसलिए जो कोल ब्लॉक्स अभी तक ऑपरेटिव ही नहीं हुए, उनका इस आधार पर आंकलन करना कि इसमें इतना मिनरल होगा, इतना मिनरल इस भाव में बिकेगा, तो उससे इतना नुकसान होगा गवर्नमेंट को या इतना फायदा होगा प्राइवेट कोल ब्लॉक्स होल्डर को, मैं नहीं समझता हूं कि ये कोई सही आइडिया है।
The C&AG submitting a draft report without some proof in the sense, without it being tested by the committee of the Parliament, it will not form part of, it will not give any kind of message.
The department was insisting for a fair mechanism for having allocation of coal blocks. Honorable the Prime Minister was Coal Minister for 3 years. What stopped him from expediting this whole issue? And if proper, cogent explanation does not come, it will only reinforce that government is trying to hide away from stark reality.
But from the initial reactions, it appears to be a scam which is larger in dimension than the 2G spectrum, in which case it is a very serious matter.
Well, Nitya Balakrishnan now joins us with the fine print of this CAG report. Nitya, what are the key findings that you've picked up?
That's right, a whole host of power and steel companies under fire today due to tabling of the CAG report in Parliament. 1.85 lakh crore rupees is the loss caused by the government due to allocation and not auctioning of coal blocks between 2004 and 2011 is what the CAG has lashed out, saying that companies to the tune of Tata Power, Tata Steel, Bhushan Steel, Adani, Hindalco, SR, Sterlite, Monnet Ispat amongst others were beneficiaries of the allocation process. The CAG has lashed out at the screening committee saying it was not transparent, absolutely biased way of coal block distribution, and that the power companies need to be scrutinized going ahead. The CAG has also recommended switching over to competitive bidding immediately, which means tougher scrutiny on private power players as well as the progress as far as captive coal blocks is concerned going ahead. CAG not mincing its words, saying close to 2 lakh crore rupees is the loss caused by the government due to allocation of resources, and saying going ahead it only has to be competitive bidding that will determine some kind of transparency is viewed into the sector.
Well, the CAG in its report has also said that Reliance Power unduly benefited from a government decision allowing the power producer to use surplus coal from its captive block for another project it was not meant for. Reliance Power stock, of course, took a knock in today's session. Nitya is still with us to tell us about what exactly are the concessions that the CAG claims Reliance Power might have gotten.
The CAG also tabled a report on the Ultra Mega Power Project policy earlier today, and of course it lashed out at the Power Ministry and Government of India for unduly favouring Reliance Power. Remember, this is owned by Anil Ambani, and the CAG report states that Reliance Power will benefit by close to 29,000 crore rupees simply because it's given permission to divert surplus coal from its existing coal blocks for Ultra Mega Power Project to other projects of the company. Now, we're given to understand, of course, that Reliance Power has indicated that the comparative measure used by the CAG to arrive at this figure is not something that they're agreeing with. CAG has measured the figures for Chitrangi along with the tariff rates for Swasan to actually come up with the 29,000 crore benefit that Reliance Power is likely to get as a result of this. But remember, Reliance Power holds 3 out of 4 current Ultra Mega Power projects, and it has been given a nod by an empowered group of ministers in consultation with the Attorney General that excess coal from Swasan should be diverted to its other projects. Similarly, from Talaya, for projects at Chitrangi and other places. Now, the most important recommendation coming from the CAG in this instance, review of Chhatrasal coal block, the third block which is allocated to Reliance Power. They think that needs to be reviewed, which could mean much tougher times for Reliance Power going ahead.
Right, Nitya. Thanks very much for all those details. Well, it wasn't just Reliance Power. The Comptroller Auditor General report also slammed the government for favouring infra major GMR for the Delhi airport project. Sumit's here with more details on that. Sumit, what exactly are the charges that were levied on GMR?
Well, first of all, slamming the levy of development fee on passengers using Delhi airport, the CAG today said the Civil Aviation Ministry violated the bid conditions for the benefit of GMR-led DIAL to the tune of over 3,415 crore. CAG said that contrary to the provisions of the airport concession agreement, DIAL was allowed to use the amount collected as development fees to meet the project cost. CAG in its audit report on IGI airport that was tabled in Parliament today said DIAL can potentially earn 1.63 lakh crore rupees over a 60-year period from the land given to it on lease of just rupees 100 per annum. The report pointed out that 239 acres of land for the construction of terminal was given to GMR Group, owned by Delhi International Airport Limited, on lease as against the market capital of 24,000 crore rupees. CAG has said allowing DIAL to levy development fee has disturbed the sanctity of bidding process and led to the undue benefit of around 3,415 crore to the private firm. GMR Infrastructure holds 54% stake in Delhi International Airport Limited. CAG report says it was noticed that Ministry of Civil Aviation and Airport Authority of India on some occasions violated the provisions of the transaction documents in the interest of the concessionaire.
Right, Sumit. Thanks very much for, of course, getting us more details on what that really means. Of course, a few moments ago, we also had the Aviation Minister talking about how there's no plan to review the Delhi airport contract. Not just that, he said that the private investment in the Delhi airport did help free up funds for other airports as well. GMR, of course, didn't take very kindly to that news because the counter lost out heavily in today's session. But not just that, let's talk about some mid-caps and large-cap movers for the day then. And Optus Circuits really deserves a mention. Their counter did quite well for itself despite very staid markets, because we had a Bank of America Merrill Lynch which continued to maintain its buy rating on the counter. They said that the company is taking steps to improve earnings quality. However, they did cut the target to 200 rupees from 230 rupees. But that didn't phase the counter at all. It ended up higher by close to 3%. Some of the other big names then, we had news of course coming in that Lupin and Ultratech would be added to the Nifty from the 28th of September. On the back of that, these two counters also added on some very smart moves, each of them gaining anywhere between 2.5% to an Ultratech, which actually was looking very quiet by the end of it all. Vijay Malla group of stocks, and specifically a United Spirits and a United Breweries, continued their good run. Adani Irrigation on the flip side, of course, it's been reacting very negatively ever since that loss of close to 16 crore rupees came out for the first quarter. Today was no different, 4.5% off for that one. But despite the fact that the markets were looking absolutely quiet, didn't mean that we didn't have some fresh highs in the session. So the likes of an HUL that continued its good run, and HCL Tech also hit a fresh all-time high today, as did a Wockhardt, a Strides Arcolab, as well as the Divi's Laboratories. On the flip side then, a Deccan Chronicle, well, we had the counter actually hitting a fresh all-time low, and after that, in the early opening moments of trade, the counter was locked in at the upper circuit for a good part of the day. At 3i Infotech as well, that one hit a fresh all-time low today. So a couple of other losers, rather big movers for the day from the small cap side of the market. We had TVZ, that recent jewelry IPO, that counter was at the upper circuit for a good part of the session. And a Great Offshore, that shipping company, well, we had it adding on close to 16%, and in terms of the volumes as well, that backed that very smart 17% up move, because we had volumes which are close to one-year highs.